Chipper Cash, an African cross-border payments company valued at $2.2 billion last year, has laid off a portion of its workforce. A few affected and unaffected colleagues shared the news on LinkedIn. The engineering team suffered the heaviest blow, with over 60% of those laid off coming from the department, according to persons familiar with the situation. For more on these headlines, we're going to have, of course, Arise Business Analyst Chika Mbonu with us to discuss further. Chika, you're very welcome.
Thank God it's Friday.
Yes, indeed. Thank God it's Friday. Good morning to you, sir.
Because today is Friday, let's do fintech first.
Yes, fintech, yes.
Before we do that,
to the other matters.
You have to have cash to worry about the limits.
Very true.
But everybody now, even my driver was protesting, said the limit is so small. I said, well, when did you withdraw? When have you withdrawn? Well, that's what they did. I mean, one of the prevalent issues in the fintech sector now has been layoffs and shutdowns and so on and so forth. And it's not nice, it's worldwide. Because also know that what affects for the fintech industry, especially in Nigeria, is almost universal. It's one world concept that's happening. And so what happens in the United States of America has triggered off, has cascaded, like a pack of cards, affected so many other enterprises all over the world. Now look at it this way. What the world has faced. The fintech industry is not immune from what what had been facing for some time now. Inflation.
Yes.
Breakdown value in supply chains arising from issues in the Russian-Ukraine war. Now, inflation principle, let's look at inflation. For the first time in the United States of America, the Federal Reserve has had multiples of 75 basis points in the interest rate. Nobody believed those could happen. And so what has happened is that the increase in interest rates has led to monetary tightening in the system. And so you had higher interest rates. And those monetary tightens, the impact on them has been to lead to a deflation in the inflated assets prices that arose during the pandemic period. Remember the pandemic period?
Yes, indeed.
Everything went fintech. So people went and started becoming bigger and hiring so many people. And so a lot of asset sizes have been deflated, arising from this increase in interest rates, arising from the tightening the monetary policy, especially starting from the US economy. And so, as evidence of that, look at what happened. Cryptos, they were valued at the time $3 trillion. Is now less than one third of they lost 2/3 of the value.
Exactly.
A lot of preferred fintech tech stocks have lost more than 50% of the value.
Yes.
Even real estate has also been impacted. So you find that everybody in the chain, everybody, if you're horizontal to somebody, you're vertical to somebody.
Right.
So the sector has been affected. Look at it this way. Chipper, remember, succeeded in their Series C Stage 2 funding. They raised $150 million, which put the valuation at $2 billion.
Yes.
And listen, who was the leader in that funding? Guess who it was? That Series 2 funding, Series C Level 2 funding. Who was it? FTX.
FTX, that's right. That is correct. I forgot about that. That's correct. Yeah,
FTX. Where's FTX today?
They're in
That's $2 billion of investments down the drain. So your parent is dead. So you're almost like an orphan. Somehow, it must affect your operation. And so many of the fintechs are all suffering this. A lot of them are, preparing for the rainy day. Remember that it has been projected that it's going to be, recession in the US. So a lot of, venture capital companies are saying, guys, get ready now for the rainy day. And so a lot of preparing for it. Even those who have sizable cash positions. So that's what's happening. The industry is going through a retrofiction in such that, all the the acquisition, all the accumulation of sizes unnecessary. People are hired even not for growth. Now, people are shedding off now, preparing for a rainy day. And so that's not, the Nigerian sector is not immune from this, because most of these companies who are Nigerian unicorns, they're all related to those companies abroad.
Fantastic. Chika, you're always breaking everything down for us. Thank you.
So see more of that. Now, cashless.
The cashless policy, which is still kind of tech, because they want us to use electronic means to pay for things,
Now, whenever a policy comes into the system, even like when the new notes came, and people were like, I always ask them, what really do you have against this policy?
Right.
Is it because you don't like the face of the God in the FLA that initiated it, or do you have grounded information or reasons why you heard it? Now, the new nose, we've gone through that battle. We've accepted it. It's a fait accompli. It's going to happen. Guys, Nigerian citizens, our viewers, please rush in there and change your old nose to new nose. By January 31st, that will be history. And you get a new nose. Now, it's going to head. I thought about it in this program. That is, we'll try to see beyond the bigger issues. The bigger issue is, one, we have about 3.2 trillion of cash, money circulation. Out of it, 85% of it is in the bank, out of the banking system. So they're looking for ways of pulling that back and getting control of the money circulation under control. On two, and the payment system, also they want to restrict it. Indeed, I don't like comparing economies, but you know that in some economies now, before you can even put £1,000, $1,000 into your account, you're going to bring your grandmother that grandfather that died and so on and so forth. So when people critique issues, especially those in our houses, Senate and National House of Reps, when they critique policies, sometimes I hazard a gaze and say, is it for the good of Nigeria or personal interest?
Exactly.
Because I found out that a lot of Nigerian institutions, critics and everybody, all they focus on, like people said, oh, the time is short for the new notes, extend it to April because a lot of people paid money for the election and it's going to spoil their game. Not because of the Nigerians. People say, people in the rural areas, where is the rural area? I've not gone to the village for a long time now. I don't know my all urban cities. So, and then the CBN pushing out something that from 6,000 agents, they have about 1.4 million agents now. If you travel out, POS is like one of the biggest businesses everywhere I go to now. And so, I'm happy. You know, there are pluses to be gained by moving the economy to cashless. Even anybody who's sincere will know there are pluses in that. That I don't want to preach my mind. A lot of things I'm going to gain. Now, I'm happy that the CBN people also have heard that on the go, they will adjust things. So a lot of people are making, 100,000, even 100,000 is too small. I said, bro, in a week, have you been handling? Have you spent that much? Do you withdraw that? So in a month, it's 400K. How much is your salary? 400K in a month. And so CBN, as I keep saying, for any policy that comes out, that has even the good advantages, must understand the implication for the economy and tinker with things as they go along. So this cash one, the truth is that our economy is still substantially cash based. A lot of MSMEs still do a lot of business in cash. They must try to watch it and make sure that things are looked at and adjust the levels as we go along.
All right, Business Analyst Chika Mbonu. Chika, thank you so much for joining us on this very serious issue. I appreciate your insight.